Hello, welcome to episode 1 of the recording for our podcast. My name is Shane Carter, CEO of Hampshire Capital, based in New Hampshire. We buy multifamily assets in the southern parts of the United States, primarily Texas, North Carolina, South Carolina, Florida, in growth markets. And we're excited to talk to you a little bit today about who we are, what we do, why we do it, and why we believe in this business so deeply. So the first, I guess, a quick background. Who am I? What's my background, and how did we come to form Hampshire Capital? So my background really is in construction and development. As a contractor, I've also simultaneously always been a real estate investor. So about 20 years ago, I got into flipping contracts, flipping houses, and really discovered that I had a passion and an interest in development and the process of creation, and taking something that is worn down or worn out or in rough shape and making it beautiful, making it something that I was proud of, that a family could live in, and really improving our communities one property at a time, so to speak. And that led to me starting a construction firm and building single-family homes, multi-million-dollar high-end luxury homes on the lakes and the oceans here in New England, doing townhome, condominium developments, mixed-use projects, etc. And those being cash-generating businesses, I always took that income and bought what we call value-add multifamily assets. So multifamily properties that needed some work, needed something to do, so I could have my construction crews do the work on them. And of course, I started small. I bought, my first property was a 4-unit, and then I bought a 6-unit, and then an 8-unit, and then a 20-unit, and a 60, and a 120, and so on and so forth. And I sort of organically grew my holdings and my investments along with what I could invest personally, as well as a few key joint venture partners that would come in and put capital in the deals with us. And so that was all fantastic and a great experience, through the Great Depression crash of 2008, and bought a bunch more of assets in 2009 and 10 and so forth. And then really started looking, about 3 years ago, about 2019, really started to think about what was next for me. I had already done that, and where was I going to grow personally? And it was going to be in national, getting onto the national stage for larger multifamily assets. Happened to be around the same time when a friend and colleague of mine, Nick Bouquet, decided that he was going to, potentially part ways with his interest in a LIHTC firm, low-income housing tax credit firm that he had been in for about 15 years. And that was really the genesis of Hampshire Capital. And so for the last few years, we've been diligently working on our investment thesis of growth markets in the South, again, primarily Texas, North Carolina, South Carolina, Florida, and really understanding, why multifamily, why would we want to be in those markets? What is our intelligent investment thesis surrounding there? And then where are our company goals, and how are we going to be different? How are we going to be unique, and how are we going to set ourselves apart from other firms that are already doing this and doing this well? So quick overview is that over the last 2 years, we have acquired 2,000 units, a little over $220 million in assets under management very quickly. And we are building out our infrastructure to really allow ourselves to scale to the next phase and get to the 10,000 plus unit mark, and get into the 2 to 5 billion asset under management range, which is really where we see our firm going and where we want to be. So that's the big picture. Let's rewind a little bit and talk more about why multifamily, first of all. And we'll have other segments that go into a much deeper dive into the nuts and bolts, if you will, as to how we do what we do, why we think about it the way we think about it, and why we believe so strongly in our business model and our conservatism in terms of how we buy assets. But first, let's start with the main thesis of this episode, which is why multifamily, right? Well, we could invest in self-storage or mobile home parks or industrial facilities or office buildings or retail or mixed use projects. And so why multifamily specifically? And that is, I think, something that every investor should ask themselves, which is, why are you in the asset class that you're in? Why do you believe in it? And what are the main investment tenets of that particular asset class? And so for us, it was very clear. So look, primarily, first off, for me, it was, well, that's what I have experience in. That's what I've done. That's what I know. I know buildings and I know homes for people, and I understand how they work, and I know how to put them together and fix them. And I understand that asset class. I don't know how to build high-rise, buildings and medical facilities and such. So that was an easy one for me. But Nick and I really dug in a little deeper and said, okay, but is that still an intelligent investment thesis? Just because you know it, maybe that's not the best investment. And so one of the things we looked at pretty deeply is, and frankly, nobody knows what the future of any of the other asset classes that we just mentioned are. They all seem pretty strong right now, especially self-storage, industrial, medical office. That all seems really, really strong right now. But what about in 10 years? What about in 20 years? Is there a potential for those to grow out of favor, or for something to systemically change, which would cause those investments to not necessarily be intelligent any longer? And there is that potential. But with housing, with multifamily housing specifically, we believe it is truly the evergreen asset class. And what does that mean? What does evergreen mean? Well, it means that it can't be replaced. It won't be replaced. It's not going to fall into a blockbuster scenario where something came along and all of a sudden the entire world changed. People will always need a place to live. People will always need a roof over their head. We're going back thousands of years now that multifamily properties have been in existence in our societies, and they always will be. It's an intelligent use of land resources. It's much more efficient and ecological to build in that fashion in terms of densities and value for all of the resources in our communities and societies. And we don't believe that it's ever going to be replaced. In fact, we feel like, but we have data that clearly proves that we are becoming much more of a renter nation here in the U.S. We'll dive into that in a future episode. But for this episode, really, it's about why multifamily, and that's the first tenet, is that it's evergreen. It's not going to be replaced. And the fundamentals of it are very, very sound. Secondly, we look into, okay, so great, we get why you want to invest in multifamily. And as an investor, you should be asking yourselves each of these questions as well. So you listed Texas, North Carolina, South Carolina, Florida, Shane. Why did you list those? Well, we've taken a deep dive into migration patterns, population dynamics. Where are jobs moving? Where are people moving? Where is the greatest demand for this particular asset class? And it is in those 4 states that we just mentioned. Yes, there are others. You could list obviously the Denver and Phoenix and other markets. But our base of operations is in New England, so we need to be able to physically get to these locations and have our team located in these locations. And from a management perspective, we didn't want to go too much farther west than Texas. So that's where we drew our line, and we really like that Sun Belt region. But specifically the states that I listed and then the MSAs within those states have extremely sound fundamentals in terms of population dynamics, job growth, migration patterns, and what the trajectory is for the next 10 years for sure. Personally, I believe for the balance of my lifetime that's going to continue to be an intelligent place to invest in this asset class. again, deeper dive on that in a future episode. So we have housing shortages. That's a systemic challenge in almost every place in America. But when you look at the migration patterns and the job growth areas and specifically Texas, Carolinas, and Florida, what you see is that there is tremendous pressure for additional housing there. And in many of those pockets that we dive into, there just simply isn't the ability to build more, right? So you have increasing demand without a massive ability to produce more supply. We really like that macroeconomic story. And first and foremost, we seek those opportunities. So one of the main taglines we have here at Hampshire Capital is we buy neighborhoods first and assets second. And that is, again, that'll be a deep dive in a future episode as well. But suffice it to say, we really do our homework in understanding the local population dynamics and neighborhood level dynamics within the major MSAs or metropolitan statistic areas that we look to buy assets in. So that is that's just a quick top level as to why we believe in multifamily, why we believe that multifamily makes sense in those specific states that we listed. And another quick point on those states is that they're landlord friendly. That is another major tenet of our investment thesis, is that we want to buy as landlords in places that have friendly landlord tenant laws, friendly to the landlord, of course, but that are not, not fundamentally egregious to the tenant either, but certainly favor the landlord. And again, we'll dive into that a little more deeply in a future episode. But that is a very much an important tenet of why we invest in those areas. So evergreen asset areas of growth and immigration, job growth, and population growth. And then third, where we can fundamentally create value and or protect wealth by investing in assets that are going to outpace not only typical equity bond markets, but also other asset classes that are potentially not as evergreen as multifamily. Again, we'll dive deeply into each one of those in future episodes and really give you the data and the data points and sources for how we do what we do, why we do what we do, and why you as an investor should be thinking and asking those same questions when you look at potential investments. So that's all for now. Thanks so much. We look forward to sharing more in the next episode, and bye for now.